Manoj Ladwa is equity strategist at ETX Capital here in London, and he joins us now. Good to see you, Manoj. More of the same in Japan and wait and see in the US. Manoj, what's your take?
Well, I think it's pretty much of a muchness. Certainly with the US yesterday and the Federal Reserve's rate decision, they were going to keep it on hold. I think it's important to note that the interest rates are going to stay at these sort of levels for the foreseeable future. And while they are at current levels, and it's all down to unemployment still being a major issue there, repossession still being a major issue in the US, then we're going to see asset prices, and certainly the price of stocks, continue to the upside. At the end of the day, there's little benefit in keeping cash in the bank when it's not paying a return, and when asset prices, you're seeing capital growth there, you're seeing an increase in dividends. There's an opportunity cost there. There's a trade-off. So an increase in asset prices as a result of what the Federal Reserve decided to do. Bank of Japan, I think you mentioned at the top of the hour, Rish, that there's a disparity between what's going on in between countries. The recovery there, although unemployment has hit a 10-month low, the recovery in Japan is not self-sustainable at the moment.
Manoj, yes, you know, it's when we look at the US rate story that they're going to be keeping rates at historically low levels. It's really a situation of looking at the glass half full, because the reverse side and saying it's half empty is saying, well, the economic recovery is going to be anemic at best.
Well, absolutely, absolutely. I mean, it's going to be a long, drawn-out recovery, and this we can see from the fact that unemployment and housing is still an issue there. And once stimulus spending ends, and it's going to end at the end of this month in the US, then what happens from there? Do we dip back into recession in the US? It's a difficult call to make. And if we do dip back into recession, does stimulus spending start back up again? So it's a question of waiting and seeing, sticking with the current policy for the time being. I think interest rates are going to remain at low levels in the US for the next couple of years.
Let's look ahead to UK data. Bank of England minutes, also unemployment figures out in just about 55 minutes from now. What are we going to get from these numbers?
Well, claimant count and unemployment rate, we could see a slight move to the upside. This could be a seasonal blip. We had a particularly cold December-January period, and that could result in a slight increase to the upside. It's also worthwhile noting that the average earnings figures are coming out as well, and that could also see a blip to the upside as well. And this is down to bonuses being paid in the financial sector. They usually get paid in January for the year end. So we could see an increase there. There'll be the argument for wage inflation. I'm not entirely convinced. And going forward, we're likely to see average earnings come back down again. But I think these figures are going to be much of a muchness. I don't see them having a major effect on the equity markets today.
Manoj, talking of equity markets, where are we, not just from a fundamental perspective as far as European equities go, but if we also put your technical analyst hat on?
Well, it continues to go higher and higher. There's nothing stopping the markets at the moment. The sentiment seems to be fairly positive as well. We did see a pullback recently, especially on the back of the problems Greece was having, but the market has managed to shrug this off. It continues to push to the upside. Volumes aren't fantastic, but then it's entirely understandable. But the demand is there for risky assets. The demand is there for stocks, and we continue to push to the upside.
How high can we go very quickly?
I think we could go up to 6,000 for the FTSE.
Right. Over what period, though, here, Manoj?
Over the next 3 to 6 months.